some traders have attributed the low turnover in Nigeria's equities markets to the forex shortage and the position of the Central Bank of Nigeria on the forex market, a tracking platform abokiFX. Now, this week, the market has seen a decline in the participation of investors. Oise Ajayi, team lead research at ARM, joins me to discuss this. Oise, thank you so much for taking the time out to join us. Let's get right to it. We've seen a bit of a lull at the market this week. What are those issues that are weighing on investors' risk appetite?
Thank you for having me this afternoon. I think the factors are still the same, or the factors that were there at the start of the year are still the same, and then the situation looks even much better now. With Nigeria, seeming to have a bit more respite now, especially in terms of FX inflows. We just completed the Euro bond issuance where 4 billion was raised. The initial plan was to raise 3 billion, but due to the level of oversubscription, that was raised to about 4 billion. And we're expecting that, or the expectation is that that inflow, will spur some positive sentiment in the market. But coming from the start of the year, all the factors that prevailed in the market were still there, or are still there. There was some relative FX illiquidity. General sentiment really in the market was negative. If you consider where the macros were, where the macros currently sit at, we've enjoyed some decent level of growth or some positives, but a chunk of it is still very frail. A chunk of it is still comes off as temporary, and so it's no surprise that we've seen the current low in the market in terms of both volume and value of transactions carried out.
Now, while investors are obviously monitoring events in the economy, of course, you know about the medium-term expenditure framework that has been passed. Talk to us about safe haven sectors that you think investors are taking shelter in at the moment, if there is any at this time. I know that banking stocks are always a big favorite for investors, but just talk to us on that point.
Yeah, so over the years or over time, the banking sector or banking stocks have sort of come off as favorites, right? But what we've seen this year sort of being a slight turnaround in that regard, where there have been setups have prevailed largely across all sectors in the market, and most of the upward movements we've seen so far have been on small cap stocks. So really, there's no particular haven. Aside you're investing in fixed income markets where you're enjoying a lower level of risk and then, of course, lower returns. There really is no safe haven in the equities market, per se, right now.
Now, from a valuation perspective, how are we performing against our other African or emerging market peers, especially for key sectors like the banking sector?
One could argue that Nigerian equities are still very cheap. If you consider where prices are currently sitting, one could argue that prices are at relatively low points, and this is a good time to get in. I think what we've seen so far is just a question of whether or not prices have bottomed out, or whether there's still room for a decline. But in comparison to a number of our African peers, we are still, our market is still relatively cheap and relatively on the price at the moment.
We have 1 minute left. What are those stocks on your radar? Those stocks that you like at the moment?
You want to consider the key or the big players in the telco space, MTN, Airtel. You want to consider the big players in the oil and gas space, Seplat. You want to consider the banking stocks as well, Zenith, GTB, and the likes. However, I think what we've seen so far has been a gulf in prices in many of the large cap stocks, where some are trading at really high prices or close to their year high prices, and a number of them are trading close to their year low prices, especially in the banking sector. So favorites are there, but it just comes down to a question of whether or not it's a good time to enter, whether or not you feel prices have bottomed out, and then how far down prices could fall at some point in the year, or whether or not the stocks with much higher prices are going to maintain the upward trajectory going into the rest of the year.